we're in a stretch of the calendar that is historically pretty pretty kind to stocks. It's called the seasonality effect. So any economic impact, and Nate, I think you'll probably touch on this a little bit later. Any of those impacts are likely to be punted into future quarters, and it's going to be left up to stocks to discount, which we all know stocks are forward looking. It's a discounting mechanism. I will say this though. I will say that if stocks do continue to rally into the fourth quarter, we get that seasonality effect. And when we do end up getting a reopening, it's just a matter of when, not if. This has all the trappings of the prototypical buy the rumor, sell the news type of event. But at the end of the day, if you're appropriately allocated, and I know I sound like a broken record when I say this, I come on here many times saying this. If you're appropriately allocated, it shouldn't matter in the grand scheme of things. It's very difficult to make decisions in a portfolio, wholesale decisions, that is. You can do some things around the margin, particularly with cash. But if you're making wholesale portfolio decisions about making predictions about what's going to happen to the economy based off of a government shutdown, I think that's a losing exercise. So I think if you're appropriately allocated in the grand scheme of things, it really doesn't matter that much.
Yeah, I think my answer is just to bottom line it. There's billions of dollars of impact that are happening on the economy every day that the government is shut down. Now, I think when I look at it, some of the data behind it, there's the Congressional Budget Office, the CBO is what it's called. It's a nonpartisan entity. Again, this is a political thing, but we want to look at it while we're moving it as much as possible. They're estimating that a 4-week shutdown, which we've already surpassed at this point, would cause about $18 billion of effect on real US GDP. Looking kind of if it turns into a 6-week shutdown, which we are not there yet. We're in day 36 of the shutdown here, but that would be a $28 billion impact. And God forbid this is an 8-week shutdown. We're looking at close to almost $40 billion of impact in just Q4. And that 8-week mark is the Wednesday before Thanksgiving, November 26th. And when you think about that, that means for Q4 GDP, growth could come down by 1% to 2%, depending on how long this shutdown lasts. But that's not really going to be a temporary effect. I think a lot of the things that don't get talked about when a shutdown is occurring is the catch-up effect that happens when the government eventually reopens. Is right now, yes, where there's an impact where there's losing dollars on GDP, but eventually when the government reopens and there's that flood of cash that people get all their back pay from the times that they haven't been paid while they've been working, or they're furloughed, or government spending then starts to pick up. They still have to spend the dollars that are allocated to them. There's a catch-up effect usually in the quarter or even, the second quarter out, meaning in Q1 of 2026 and in Q1 of 2026, Q2 of 2026, we're going to see a lot of catch-up effect. So while I just mentioned, with a long shutdown, there could be up to $40 billion of impact. When you factor in the likelihood of what will recoup over the next 2 quarters, that first half of 2026, we're only talking about a $7 billion to $14 billion loss of true kind of GDP or economic productivity. And while that sounds really big, remember, large numbers always sound big, but that's why in investments and financials, you always want to look at percentages. So if you seem like that's a scary $14 billion is a big number, but the US economy is $30 trillion, meaning that's only about a 0.5% or 0.05% impact at the high end of those estimates. So really, as long as the government gets reopened eventually, there is that back pay that comes in back into the economy, all that spending will catch up. It's more, I think, just a displacement of when the spending happens, which is why I think the markets, Aaron, to your point, haven't really been affected by the shutdown itself.